Hey everybody, we're going to be doing another Forex market preview today, and this is going to be a short one today because I sent out a Forex market preview. It was a 30-minute one the other day, and 3 days ago actually. And today is December 12th, 2012, 12/12/12. There you go. We talked about a lot of different pairs. We went through a lot of different charts. So a lot of the pending trades that we have sitting are still the information is still in the market preview from December 9th. So if you're watching this video from YouTube, you can scroll down into the description. We'll have a link in there to the December 9th video because we're a lot more detailed on some of these pairs in there as well. If you're watching this from our website, directly underneath this video, we're going to have the link to the December 9th Forex market preview. It's 30 minutes long. It's very detailed, but go watch that. And we'll talk about some of the pairs that we're in. But we're going to do a quick review today, but I'm going to keep this really short today. Right now, we're looking at the Pound New Zealand daily chart, and we actually have a short position to sell this thing around 193.80 level. And what we're wanting price to do, if you watch my videos, and I try to make these as training oriented as possible for you, so that you understand what we're doing. You can see that long term, this pair has been trending down for quite some time. In fact, you can start right here that this downtrend started, but the reality is we can look at this as a downtrend and this as a pullback, and then the downtrend continued. So here's what I want to do. I want to actually pull a Fibonacci level. I'm just curious. Oh yeah, you see this? So I pulled a Fibonacci level, a retracement line, and we pulled it from the swing high to the swing low. And if you can see here, price on this Pound New Zealand. Now, if you know anything about the pound, and one thing I'm working on in my Forex training course is that many of the characteristics of certain pairs have a tendency to go to certain levels. Like the pound happens to love the 50 level. They love the 50 retracement, very strong bounces many times off the 50 retracement. Also the 62 levels, and also on the charts themselves the 50 levels. So like at a pound dollar, if you get to 162.50, they tend to have bounces off the 50 levels. So anyway, we're going to get a lot more in depth in that in my full training course. In fact, underneath this video you can actually go to our website, and I'm going to have a little video explaining a little bit more about the course that's coming up in January, and a killer special that we're running right now, how you can get our services for an unbelievable price and get the course for free. The course is going to be selling for $597. You can get it for free, so you check that out. But anyway, you can see here that price actually started, it was been on a long swinging uptrend for quite a while, and on the day of, let's see, what day is this? May 23rd, price was climbing. It hit its peak, and you see this pin bar. That was it. At that price came down, bounced back up a little bit, but came down to a swing low and has continued to work its way back up. Now, this has always been in a downtrend since May 23rd, the pound against the New Zealand dollar. Okay, but this level, what we had here is once price came down to this 1900 mark, which is a strong support level. Okay, let's look at this right here, 1900-ish. Okay, strong support level. In fact, even over here came down, strong support level. So let's look at a couple of different things we're going to be looking at here. So price came down to this pre-existing strong support level. The market already recognizes as a strong support level. Came down, went up to the 50% retracement. Okay, now here's where we talk about in some of these videos. In fact, I want to zoom this in real quick here. Here we go. All right, I want to show you how right here, this 50% retracement level is also right at the 2 mark. Do you see that? That is what you call a confluence of events. So when we're taking a trade, the more confluence that you have, that a key level, that you're sitting at a key level, the better opportunity you're going to have for a trade. Now here's one thing I want you guys to understand, and today's going to be more about educating on some of the psychology levels that people don't understand. The tendency for most traders, 99% of all traders, which is why most traders fail, other than the fact that poor use of equity management, and here's one of the other reasons, is that a trader most of the time thinks, I have to be in a trade. We get this all the time with our service. Now, most of the time we are usually in a trade at one given time. Okay, most of the time we're in a trade. But for right now, we happen to, as of yesterday, close out our final position on our Aussie yen, and we have a ton of pending orders. But people are asking, hey, why aren't we in any new trades? And the reality is, guys, listen, sometimes the best trading move you can make is not to trade, okay? Is to wait for an opportunity. Now, if you would have been in this, watching this pound New Zealand daily chart, and you would have seen price going up, 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 you would have seen that this is a Fibonacci retracement level, and it's also right at the 2 level. So you have a double whammy for a bounce right there, a very strong opportunity for a double whammy right there, okay? So for sell position, so that would have been an amazing sell position, okay? So let's get out of that mode and focus on where we're at now. Price came down, retraced to 50%. It's now been working its way down. But right around this 93.87, 93.80, 193.80 level, we've created a base. Okay, this has always been a solid support resistance level. If you look at here, price had a problem chiseling through it. You know, see what I'm saying? When it finally did, support became resistance. Remember, we talked about this before. Think about a hotel, floors and ceilings. Once you go upstairs to the next floor, what used to be the old ceiling is now your new floor. Price finally broke through and now is ceiling. Now it's chiseled its way through, had a difficult time, worked its way up, look, bounced there again, flew through it, and it will fly through it sometimes, but still, for the most part, this has a lot of solid support on this level. So here's what happened. We worked into a downward moving channel in a slash pennant pattern, okay? What happens is you have a floor, the price keeps going up, so one way to look at to determine a trend, right, is you have lower highs and lower lows if you were looking for a low downtrend. So high to a low. To a lower high, this high is lower than that high. To a lower low, this low is lower than this low, right? Downtrend, downtrend. Retracement, but now look, the highs are getting lower and lower and lower, but the lows are staying on this base. So it is forcing a squeeze, a pinch, okay? And when you see this downward push moving pennant pattern, what you're ultimately going to see is a break to this bottom. Boom, okay? Now here's what support becomes resistance, resistance becomes support. So now what are we looking for? Price strongly over the last few about a week ago, we saw a strong move. I don't know how many pips here. We're talking 400 something pips in a few days. All right, still continues to move down, but what we're seeing is these candles are getting smaller and smaller. What's that mean? It means that the selling pressure on this pound is starting to dissipate. Okay, though I do continue to see the pound New Zealand dropping. Okay. The pressure of this down push is weakening. So now we're waiting for a retracement. Now, where do we think this thing is going to retrace to? And where would be the optimal place to get in? Now, I think this pair is going to continue going down for a little while, at least down to 1,900. We could have a reversal run there, or could keep on dropping. But does that mean we just jump in this trade right now? No, because that is what's called chasing the market. Because usually, right when a pair is going strong, and you jump in, that's usually when it retraces back and you end up getting stopped out. So we have to wait for a pullback to a key level that is going to be the safest and most highly probable opportunity to sell this pair. Okay, so what we're going to do is wait for this price. It's already weakening. In fact, today's candle, it's still obviously early in the morning. It is almost 9 a.m. Eastern time, so it's still very early. The market's just rolling. But for the most part, we've seen pound strength across the board as it is. But we are seeing weakening. In fact, we're seeing a very weak pin bar movement type of thing happening on this pair. So what I'm waiting for, and we have a trade set to sell this at 93.87. Now, this is 200 pips away, but in this pair, it could be a couple of days. But when we're looking on daily chart, we are sometimes we just have to be patient, folks. We have to be patient for price to pull back to a key level, the highest probability level. Okay, Forex. Now here's one thing I want you guys to understand, because we get emails all the time, and we do not respond to these emails. By the way, people will say, "Hey, what do you think? Where do you think the pound dollar's going?" We don't answer those because it used to be my team would say, we don't have a crystal ball. We don't know. All we can do is pick the highest probabilities of where we see the highest probability trades based on the trend and the technical analysis and the fundamental analysis, which is where is the underlying economic factors in the market that are driving the market right now at this point. Okay? So with that said, we see that we have a downtrend. We want to sell this pair. Okay? So we want to sell this pair, but we can't just sell it now. We already see it weakening. If you sell this pair now, you are going to get stopped out. Very high chance that you're just taking a gamble. At that point, you might as well just get into any trade you want and start buying and selling, and you'll win some and you'll lose some, and you're just kind of flipping the dice. So we were waiting for price to pull back, a retracement, a pullback to this key level, which was now going to be resistance, and a sell here with our stop up in this range, and then a push down to the 1900 level. At that point, as price moves down, we'll begin closing parts of our positions and moving our stop to break even, and then down, down, down until we eventually get stopped out or we hit a profit target. If we get stopped out, we get stopped out in more profit. If we hit a profit target, hey, we're all happy campers. It's almost a 400 pip run. So, with that said, there's also the fact that this thing is currently on a downtrend. We can also take a potential look at an opportunity for a counter trend move. Now, I would not put as much stock in this as a sell position here, but I would also look for a bounce at the 1.9000 mark, because it is such a strong key level that I would expect the market, if it did continue driving down and we did not get taken into this area, that if it kept driving down, we would hit this level and at least see a good 50 to 100 pip bounce at the worst before it continued breaking down through, if it was going to break down through. Or it could have a complete reversal. So we look at key levels. Again, we were right down here at 19000. That's a good place for a bounce to take some pips off the market right there, and a great opportunity to sell this puppy would be right around the 193.87. So here's what we're doing. That's going to be it for the market preview today. I wanted to leave a little bit more on the education side, because a lot of the trades that we're in now, for our free members, our Pro Signals Direct members, and our Mirror Trader Pro customers, the ones that we have pending orders, and I don't know how many we have pending right now. I'm guessing 9 or 10 pending orders that we're waiting. A lot of these are several hundred pips away from being taken in. We have to wait, especially at this time of the year. The market volume slows down because a lot of traders start chilling out. A lot of traders take the holidays off around Thanksgiving until the beginning of January, and so market volume is down. And when market volume is down, and you have economic news announcements still coming out, you can see some sharp, aggressive moves. At this point, we're going to back off and focus more on some of the pairs, that is. We're focusing more on higher time frames to take some of these trades, but some of the pairs have been ranging on the shorter time frames that we've actually been trading in. In fact, that's what we took on the Aussie yen. Did very well on that. I wish I would have stayed in, because it went up another 50 pips, and considering I had a 40 pip stop on that trade, that would have been another 1% for me, but I went ahead and closed out early, right around the figure level, and but that's okay. You can't sit back and cry over spilled milk. Still did very well on that trade, but you don't need to squeeze every dime out of each trade. Feel free to take some pips, take some profits, be happy with your results. But anyway, go back and watch the December 9th video if you want to get a lot more detailed into why we're in the trades that we're in, and what the pending trades that we have sitting. Because I don't want to review the exact same thing we went over. We're just kind of waiting the market out a little bit. We have some strong trending pairs that we're we're really excited about, but we've got to be patient and wait for a pullback, just like this trade. Okay, we have to wait for a prime opportunity, which would be a bounce off of here, or a pullback, which I'm expecting is literally what I'm hoping for, a pullback to this level where we can sell this thing short. Okay, so that's it for today's preview. Again, go watch the December 9th video. It's 30 minutes long, and it goes through a ton of different pairs. That's 12 or 13 pairs, and I show you exactly what we're looking at and why we're taking the trades that we're taking. I hope that was beneficial, and we'll talk to you later.